So the main focus of our platform is that in the categories of deposit growth, we fit clearly into what is considered specialty deposits. And as you dive a little bit deeper into specialty deposits, the main area that we focus on is going to be commercial escrow and sub-accounting. I joke around most of the time when I present, I say, no, not that escrow, because most of the time when we talk about escrow, even in the financial institution industry, a lot of people are thinking escrow on mortgages, right? Where you escrow for your property taxes or your insurance or whatnot. That is not what we're talking about here. What we're talking about here are commercial customers or commercial clients who have to use escrow or sub-accounting on a day-to-day basis to run their business. And most of the times, the way that we talk about this, and this doesn't cover all of the use cases, but it definitely covers most of them, we oftentimes refer to these as three-party accounts. So first, you start with the financial institution as the first party. Second would be the company. This is going to be who the customer is or the client is of the financial institution themselves. However, the company is actually holding the money on and for and behalf of their customers or their clients. That's why these are three-party accounts. There's trillions of dollars in the US financial system that are held in escrow accounts, trust accounts, FBO accounts, sub accounts, omnibus accounts, et cetera, that fall into this type of three-party account system. And however, even though there's this huge opportunity, very, very few financial institutions are actually doing it. And one of the reasons is because when you dive into the different industries themselves that use commercial escrow, there's a couple things that make it difficult to be able to support. So if you talk about landlords or title companies or real estate offices or funeral homes or 1031 exchanges, each of these have different rules depending on the geography as well as the industry on what they can do, how they can be treated, what are the specific use cases, et cetera. So the banks that have jumped in to power these types of accounts or to support these types of accounts, and like I said, there's very few financial institutions in the US that do this, they find that it's a very inefficient process and extremely costly. So much so that we've even seen some of the largest banks in the United States who dabbled their toes in it pull back out because of the operational inefficiencies. And in the end, that's what we do. We've built a platform to be able to help manage these commercial escrow accounts in a much more efficient fashion that is more efficient not only for the financial institution that's offering these, but also more efficient for the commercial customers themselves.